Hey traders, this is Ron Haidt at Market Tamer. Happy Monday, hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Markets were up a little bit today. The SPY added 46 cents. The diamonds, the Dow ETF added 10 cents. And the Qs tacked on a whopping 37 cents. However, the Qs are probably not going to be trading higher tomorrow unless Google reverses course. So Google is down after hours. If I pop out this little panel here, as of literally 5 p.m. Eastern, the stock's trading at 12.05. It closed at 12.96. So we're down about 90 bucks. Now, a $1,200 stock down 90 is like a $129 stock being down $9 or a $12 stock being down 90 cents. Just move the decimal. So, almost 100 points sounds like a lot, but in the grand scheme of things, it's actually not that much. To put it in context, if it's down 90, that puts us right around that area right there. I'm going to go ahead and zoom in. That $1,200 area. Now notice the 50-day SMA, institutional moving average in orange, is coming right up there towards 1,200. If it gets below the orange line, that will get my attention. Because anything could happen after hours. We could go down double, triple. We could pair the losses. Who knows? It's still digesting what the report is. So we'll have to wait and see what tomorrow brings, a first full day of trading. That will be much more telling, I think, than just simple aftermarket knee-jerk reactions. But nonetheless, it's right there at that 50-day. If the 50-day falls, that gets more concerning. Then we go to the 200-day institutional moving average in purple. If that falls, well, the next major support are the December lows. Not saying it's going to get there, and we can be positive by the time tomorrow rolls around. But right now, at $90 gap down, we want to keep an eye on that 50-day. Below it, the bulls just lose their edge, which is a nice segue into a question I get asked a lot. Now, I can't tell you what to do. I'm not a licensed financial advisor. But in my humble opinion, I've been asked for 5, 10 years or more what the 3 top long-term stocks would be I would consider to be bullish. And the 3 are Apple, Amazon, and the one you're looking at now, Google. So AGA, Apple, Google, Amazon, AGA, whatever you want to call it. If you look at, look over the past 5, 10 years plus, they just keep going higher. They're after world domination. Now we could throw Facebook in there, I suppose, as well. But if I had to pick 3 stocks, my favorites, Apple, Google, Amazon. I had a question on NOG, which is Northern Oil and Gas. This is a little $2, $3 stock. It's $266 as of the 29th. And if you look at the 285, 290 area, it was resistance just a couple days ago in March. And then we had 285 in January early, and then sort of later on in January. Look at the purple line, 200-day institutional moving average. It needs to get above that. And when it does, or if it does, that would be a technical breakout. For whatever reason, this little $2 stock is fighting with its institutional moving average. We get above it, that would turn the tables to a bullish technical position versus just being sideways to bearish. All right, WBA is Walgreens, Boots Alliance. This stock has been pretty easy to see here, right? Really strong downtrend. And one of the most common questions I get asked would be, how do you know when downtrends are over? Well, you never know for sure, right? There's not a sign that gets put up and says, hey, I'm done now, buy me. But the first thing I would look for, if I went to candlesticks, bullish engulfing on big volume, something like that. If I just use moving averages, I would need something above the red line at the very, very least that acted as resistance for earnings here and even back into February. If we see volume picking up and stock is closing near the highs of the day and we get above the red line, that would be a sign that, if I was bearish on Walgreens, maybe I need to rethink my position. Rethink my opinion. But right now, the bounces are being met with more selling. So this thing is still bearish despite today's 1+% move. And I haven't talked about oil in a while via USO. I don't trade crude futures or anything like that, but USO has been on a rally just like the overall market, put a low in Christmas Eve, and then we get up into the 13, 14 area. Now we're starting to see some selling pressure. It has gotten below the red line convincingly, you could say, on Friday, first time that's happened in a bit of a while. But look at the 200-day in purple and the 50-day in orange. They're both going to come together around 1275. If USO gets below both those longer term moving averages, that would then turn the technical picture, nothing to do with fundamentals, just technical, bearish. So I like when we have confluence like that. So let's keep an eye on 1250 to 1275 if I was following USO. And that's it. Nice short video. We'll have more earnings tomorrow with Kraft Heinz and Apple after the bell. That should be a lot of excitement, hopefully. That is it. Wish you guys all the very best, and I'll see you in the next video.